I'm speaking to Trevor Simms, Independent Financial Advisor. Trevor, I want to set up an investment portfolio that's got a good mix of stocks, shares, property, etc. Fully appreciate that as a financial advisor you can help me get that set up, but going forward I don't have the time, experience or quite frankly the inclination to manage that portfolio. So how would you be able to help me?
Well, that's quite a common issue, and we certainly believe that it's important that the portfolio is kept under constant review, so that if there are changes either in market conditions or in the performance of a particular fund manager within the portfolio, it can be adjusted and you can move on. I think most advisors who will provide you with advice on establishing the portfolio will be happy to provide some sort of review mechanism and advise you when things need to be changed. However, they will need to write to you, set out in detail the reasons for any changes they're proposing. You then have to come back to them and give them authorization before they're able to react on your behalf. And frequently, when market conditions change, it all happens very quickly. And responding to that equally quickly can be quite important if we're to protect the portfolio. By contrast, discretionary fund managers who will require a higher level of qualification in order to be authorized to provide the service will be authorized to act on your behalf without requiring your detailed permissions for each adjustment that they make to the portfolio. In that way, the response time can be much quicker. You're sure that it's being monitored on a day-to-day basis. You're not relying on a review every 6 months or a year, and we believe that that will significantly improve the performance of your overall portfolio.
Okay. So I can see the benefits of using the discretionary fund management, but doesn't this significantly increase the costs of managing that portfolio?
It can do, but it depends on who you appoint as your discretionary fund manager. Because a lot of financial advisors who are not qualified to provide that service, in fact more than 80% of them at the current time, will recommend that a client has the portfolio that they have established for them managed on a discretionary basis. In that scenario, you are certainly going to incur both the general financial planning advice charges, and you will then pay separately for the discretionary fund management charge. However, it is possible to find an advisor who is also a discretionary fund manager, and I'm happy to say that as a company, we're in that position and we can do both so that you cut out the second level of charging.
So if I adopt the discretionary service, do I still get a level of flexibility on my exposure to risk that I'm comfortable with?
Absolutely. It is very important that we conduct some detailed research as to the level of risk you're comfortable with accepting in order to get the level of returns you're hoping to. And the mandate under which we will operate will be set within that parameter. It's also true that if, for example, you have a particular holding that you may particularly be interested in retaining, then you can set that criteria out and we will ensure that that particular investment is not sold without your prior consent. So you can exercise a reasonable degree of control in the strategy we're adopting.